The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me today is analyst James Carlisle. JC, we haven't seen you for a while.
No, it says May the last time I had an invite to one of these sessions. So I don't know what's been going on, but you've been doing
You
it
must have
without me.
done something naughty. You're in the sin bin. Now you're back.
No, well, I've been lying low. You've been getting Graham involved more, and I've been hiding. So
What
that's
a revelation Graham has been. Yeah, sitting over there in Vancouver, not getting on the podcast, and now he's a star of the show.
yeah.
Speaking
him
of the
back.
star, we've got the other one, the other guy. What's his name? Mickey. You're in Melbourne. How you going?
I'm very
Welcome.
good, thanks, Gaurav. Thanks. Hi, JC, and
Hey, Mickey.
hello.
Do
Hi.
you guys know each other? Do you guys?
We've met before.
You've
Can you
met-
introduce us, actually?
Mickelson, meet James. Now,
Yeah.
Mickey, I thought today we have just finished reporting season. It's been a pretty torturous couple of weeks. I don't know about you, Mickey, but JC and I have got kids at home. I've got a 4-year-old at home. I've got construction going on at the house, and it's been a nightmare getting everything done. Apologies if updates have been a bit slow from my end. I know you guys have been really quick on them, but it's finally over.
Not me, Mickey.
Mickey's been
Graham's the machine.
Graham's
But
been
anyway,
good.
yeah.
It's all over now, so I thought this might be an opportunity for us to catch up and go through some results that we thought were interesting or were particularly important. So I've got 2 stocks. I hope you guys have 2 stocks as well, and let's run through them. JC, we might actually begin with you because I have a pretty good idea of one stock you're definitely going to talk about.
Yeah. Well,
Is
you're
it going to
talking
be?
about Altium, are you?
Yes, I'm sure it's going to be Altium. Do you want to begin with that one?
Yes. Yeah, sure. So, as results go, Altium's on Monday this week was about as ugly as, well, no, not as bad as ugly as they get. I mean,
Wasn't that
revenue went
bad,
up,
was it?
profit went up. I mean, look, it's still in the game, but it was just very messy. There's a lot of confusion because they sold the tasking business halfway through the year. So there's confusion over whether the numbers include that or they don't include that, and in fact they missed their revenue target. It was a little bit disingenuous of them, a lot disingenuous of them actually. And I missed this initially, that they because their target for revenue was actually stated to be without the tasking revenues, and they said they'd made it but included half a year's worth of them. So without that, it was a miss. But probably getting the headlines was the fact that the results came out unaudited because they can't find any auditors, or they can't find the right auditors. I don't know. And that, you see, that's where the conspiracies start, because if you want a particular auditor and you see they've got a tax dispute going on, which they revealed contingent liability of anywhere from 15, they say, to 120 million US, I think, to do with changing residence to the US 6 years ago.
Have you guys seen any other results that have also been impacted that haven't been able to find auditors?
I haven't.
I haven't either.
Correct?
Yeah. No. It is slightly.
There was a
suspicious.
thing ASIC was saying. Yeah, well, ASIC was saying a few months ago that it was difficult to find professional services staff, and I think it's a known thing that it's hard to find them because, well, apparently it's partly
But
locked down.
I guess the question is how do all the other companies? What's different about Altium?
Yeah, I don't know. Well, their headquarters is in the US, which may impact things. Look, I don't know. But that's what opens the door towards all the conspiracies. Then you've got this contingent liability, which look, they said on the call. Mogazimi said on the call he doesn't expect to pay a cent. He says, look, it's all about double taxation. It's about they shifted residence, and so for that year or whatever, or for a period, I don't know, the US are claiming tax, and so are the Australians, and they're just pretty keen that they don't pay it twice. But for the time being, they have to recognize a contingent liability. So look, it's a company. Apart from that, the accounts are pretty clean. They don't capitalize R&D, and so there's not much that can be wrong, I don't think. And anyway, they say they're going to be audited within a week, and what's in it for them to. I
Mm,
just I dismiss that. I think it's just explained by the right people not being available or whatever it is. The bigger thing though is the revenue miss and the fact that so you know they set these big targets. They're unusual. Domino's does it as well. One or two other companies do it. Talk about sort of 5-year revenue
yeah.
targets, and that's great to see. That's great to see that long term or at least medium term ambition, which a lot of companies don't really talk about.
Mm,
But it does give a lot of fuel to the bears if you're missing it.
mm,
Um, if you're missing them. So they pushed out their revenue target. Their 500 million US revenue target was set for 2025, but people have been reckoning for a year that they weren't going to get that, and now they've sort of admitted that. Halfway through the year, it was, well, we might still get there with acquisitions, and now, well, no, we're not. Even with acquisitions, we won't get there till 2026. So but the thing is, do you want to have targets or not? Do you want a company to have targets or not? I think it's a good idea. I don't mind them, talking about them to the market.
I like the fact that they have the targets that demonstrate that they're thinking about long-term strategy. Um, but I don't want those targets to be restrictive in that the company feels as though they have to fill any gaps with acquisitions. That would be a big red flag for me. Is that do you have a sense that
Yeah,
that's
no, I
going
think
on a
that's
little bit?
exactly right. You don't want the cart leading the horse, essentially, and that's what they've done. They've said, look, so we're not going to meet them, so we'll just shift them out a year. And to me, that's absolutely fine. I really don't want them doing anything silly to try to meet that 2025 target. I mean, part of the thing that they've been doing the last year or so is discounting heavily their term-based licenses. So they're trying to build seat numbers, which is another of their targets. They're aiming for 100,000 seats, currently 54,000 by 2026 now. So they're shifting people towards term-based instead of perpetual licenses.
Mm.
And that's required a bit of discounting, especially in the pandemic, and that's slowed them down. So they're still doing the right things to drive the business forward, in my opinion, but it has a revenue impact, and so they're recognizing the impact of that, and they're not letting those targets dictate. Uh, what how they're running the business, but nevertheless, it's good to have some targets, and it helps to focus the mind, I think, of the people who work there and all that.
Now, JC, speaking of targets, this was itself a target for, is it Autodesk? Is that what the...
Yeah, Autodesk. Yeah.
Yeah, right. Okay. So they rejected that offer. To me, it seemed as though that was worth considering. What was...
Well, no, I don't think it really was. I mean, it was
No?
$40. The current
Yeah.
share price
Yeah.
$30. I mean, I think it was quite opportunistic. It would need to be 50 plus for
Yeah.
me to be interested, I think.
I get the
Um,
case that I understand that if this big industry unification that they're working on is incredibly valuable if it all works, and I think you or someone, maybe it's you, JC. I think you mentioned sort of $100 a share it could be if it
no,
all
I don't
works
think
out.
I've said that.
Oh, right, okay. I think I've...
But I mean, look, I wouldn't dismiss it
Yeah.
for a long time in the future. I mean, if you look 30 years time, I'd expect much more than $100. So, I mean, look, it depends on, you got to give timescales to those sorts of predictions. But
And there's
um,
no guarantee that that integration will work, that the industry will accept it, or that it will become a standard. So if you risk weight that and adjust for the time value, I would have thought around the high 30s to $40 a share would have been a reasonable
Well,
takeover.
but that's the point, isn't it? You risk weight that,
Yeah,
and in those words, there's a very big spreadsheet in those words. I
yeah.
mean, it just depends how likely you think they are to drive this. So what they're trying to do is build a platform that has all comers on, and effectively
Hmm.
consolidates their position as the dominant PCB software designer. And they can also get revenues in from people buying the components, and also through manufacturing the actual boards at the end of it. So they're trying to build this whole platform. And that could be incredibly valuable. So
Yeah.
as you say, and if they get bought by one player like Autodesk, that kind of limits their potential in that area. And that's really what they're saying. The way they maximize their value is by being independent.
I see.
And look, you're absolutely right that you've got to risk weight that, but how good a chance do you think they've got of getting to this platform? And I think the signs are pretty good. They're adding a lot of value. I think that you can. I understand their arguments that there needs to be someone who's doing this because it's makes it so much more efficient, the process to bring the mechanical engineers together with the
designers.
PCB designers,
Yeah.
and all these people need to come together on a platform
Mm.
to build a new product. It makes good sense, and I'm happy to back them to do that. Maybe it doesn't work, in which case maybe the shares are only worth half what they currently are, and you lose some money. But these are the way you
What you've said in
you
the
have to.
past, though, as well, JC, I think was a key part of the investment case is there's sort of a network effect that, you kind of reach a critical mass where, there will be more and more people coming to the platform. So that kind of, does that improve is that kind
Well,
of
that's
what you...
part of it. That's part of being the platform. So, I mean, the platform really only works if you've got everyone on board.
And how far are they from that stage? That sort of tipping point, do you think? Like, do they have
Well, I think they're just getting to it. I mean, so what they've always talked about is dominating first and then transforming. And they've reached what they think is the dominating stage. So they reached they got the biggest market share in seat numbers a couple of years ago, and now they're sort of gunning forwards in terms of revenue. But I think they're getting to that point. They're growing market share when others aren't. And they're the one that have the cloud platform Altium 365, which has been getting rave reviews. And that's it's really there that the battle's going to be won and lost, not in whether the revenue target is 2025 or 2026. So I think you're absolutely right, and I think that they're just getting to that point now over and I guess this sort of pandemic came at the wrong time in that respect. Well, it came at a good time to help them sort of focus on building things out, I suppose.
I
I
guess
do
that could
like that
sort of
about.
explain the
Sorry, go ahead,
discounting as
Mickey.
well. Oh, sorry, that could just explain some of the discounting as well. I guess, you're giving up some revenue today, but you're hopefully just acquiring customers and
Yeah.
you're plugging more people into the platform.
Yeah,
So
that's right. It's the seat numbers that you really want to see going up, and the usage of Altium 365 by subscribers, but also by other people in the industry.
I do like that about the investment case actually, because it relies on the patience of investors to see out this really ambitious, but as you say, James, quite high value and sensible and task of kind of integrating all the bits and pieces of the industry. But a lot of investors you saw from the share price, they're more concerned about what this year's numbers and next year's numbers or even this quarter's numbers are looking like. And so there's an opportunity there for the patient to take advantage of that. So I like that. There's an obvious inefficiency in the pricing, and you can see why this thing would be mispriced today.
Yeah, and I think the thing is that management also is a little bit slippery, if you like. They're a little
That
bit,
was my yes. I agree with that. All these
I mean,
multiple flywheels and weird.
I don't mind the flywheel so much, but the language of
Hmm,
the announcements is very bullish. And this thing with the revenue target, I mean, this year's revenue guidance, including or excluding tasking, and just a little bit of but I was thinking about this, and look, maybe I'm just looking at the the glass half full, but I think analysts have a tendency to want and expect managements to be cold and analytical like they are,
Mm.
and cynical and all that. And that might work for a bank or a supermarket or something, but I'm not sure that it works so well for a tech company
Mm.
that's breaking new ground and growing quickly. You actually want someone with a bit more optimism and a bit more drive.
Mm.
And sometimes that optimism sort of leads to them possibly gilding the lily or skipping over the negatives. That's just sometimes the sort of person that you need to take this sort of business forward. And I think, I think Merkazemi is fundamentally honest. I think he's smart. I think he has the drive. Um, and look, investors, I think, but it gives fuel to the investors who want to, pour scorn on the investment case and doubt the targets and all that.
So I quite like the investment case. I was definitely on board when you upgraded, and the track record of the business is quite astonishing. They've come from third place to crush the competition and become market leader by quite some margin. So that's all really, really impressive. But what's kept me out of the stock personally is the behavior, language, and as you say, JC, the slipperiness of management. That's kept me out of it.
Yeah.
And I haven't really made up my mind about which way to go. I do think it's kind of attractive. I saw the share price fall, and I thought, I think the market might have this wrong. Valuing this on sort of a year by year profit is not the way to do it. So I'm still tossing it up.
I think I'm going to regret using that word slippery. I don't think he's slippery. I think he's sometimes a bit ebullient and a bit he sees the positives
Ebullient.
and
Love it.
he perhaps skips over some of the negatives. He's not sort
JC,
of
I'm
cynical
just
and
googling what a brilliant means.
for those following at home, JC has, I reckon, the best take on management. We were talking about Telstra CEO, and JC came out with his ripper where he said he doesn't like the way that he combs his hair back. It's not the style of hairstyle you'd expect from a big
oh
telco.
jeez, I'm going to regret saying that as well. No,
But you
I've
know
got
what?
nothing against
Well, you
a
laugh.
comb over.
That's why you're here, JC. We need these takes. We need these
Well, we
CEO
do.
takes.
Well, JC, I remember when we went to meet the boss of Icentia. We went into Icentia back after it listed, and it looked like numerically, it looked like a great business, right? We went to
I
see
was very
visit the
interested in
company.
it.
Yeah, you were.
Yeah.
And within sort of 15 minutes of meeting management, JC was out saying, "No, that guy's not the right guy. He's not the right guy. I don't know. Maybe his belt was too high or something. Some really
No,
pedantic
no,
reason."
look, I mean, and this is going to annoy a lot of people on the podcast, but he was too old. I mean, he was well, no, but also his attitudes he was very much based. I thought
Yeah.
I forget his name, begins with C. He was very much based in old media and in sorting out news clippings for newspapers and I didn't think he was the man to lead the business
Yeah, because he was
into
too old and he wore his
the
belt
tech.
too high.
No, no, it was his language. It wasn't. I mean, look, he just came across as an old media
Yeah.
person and not a new media person. That's
What I'm
really what
saying
it
though
is.
is that these
Yeah, I
little,
wanted him in a tank top, black. What is it? A black tank top or whatever.
I think there might
I
be
guess it's
some,
like you gotta use judgment
yeah, when you,
when you assess if you're going to trust somebody. And I guess that's kind of what you're getting at, or whether you think they're competent or up to the job. There's kind of lots of little factors that are hard to maybe put down on paper, but you kind of just make a judgment call on that, and there can be lots of things that feed into it.
Yeah, that's right. And when I hear Merkazemi talking on the conference call, he 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 does. I mean, look, he comes across to me as honest. He comes
Mm.
across to me as someone who just
Did
really
he tell
wants.
you
He's
that?
got a
Or
vision. No, but it's the way he answers questions.
Mhm.
He doesn't.
It's the way
Sometimes
he's,
the announcements are a bit sort of over the top sometimes, but when he's actually asked questions and put on the spot, he does, I think, try to explain things as
just
he
wait till he
sees them as
starts
best he can.
gelling his hair back, JC, then the opinions might change.
That wasn't the thing about the Telstra CEO is
Yeah.
not. I mean, I was joking, obviously, about his hair, but
Obviously, yeah. Let's
he
make that clear to everyone.
yeah
That's right. He was
he
joking.
feel. I just feel he strikes me as someone who's look. I don't want to be rude about anyone, but he seems And look, a lot of companies have these guys who come in and they're interested in their options and I don't know. Look, I'm being very rude, and I don't want to do that.
Fair
But
enough. Okay, well, we're getting a bit off.
sometimes you get it. Look, he wasn't a company founder, right? Put it like
No,
that. He wasn't
yeah.
a company founder. He didn't have a big pile of shares that he acquired years and years ago, and that's what I like to see. And I prefer not the sort of the sort of hired guns. I don't know when he joined Telstra, but maybe he's been there 20 years, in which case I'll shut up. But
Any other character assassinations we need to go through today,
no,
Jason?
no. Look, geez, I've said far too much.
I know. Well, we haven't even talked about WiseTech. Whew. 'Cause that could
Oh,
be that
look,
could be
he's all
interesting
right. He's
conversation.
got a big collection of guitars. I like that.
Dickadata? No,
Oh,
we won't go
geez,
there
yeah.
either. No, we
Well,
won't
he
go
had
there.
an interesting announcement. I
That was
think
hilarious. Did you
recently
see
because
that?
he sold some shares and the share price went down, so he released it. Everyone should go and read that announcement. It's pretty funny.
It's
He
great.
bought a jet and what else did he do? I don't know.
He runs a supercar. He's trying to build an Australian supercar, and he sold millions of shares to fund that supercar ambition. Bought a private jet, and he's dabbling in US equities as well.
Yeah, you don't
Yeah.
want private jets. I mean, I
Nothing
think
wrong with a
I read
private
an
jet.
article about the
Warren
Telstra.
Buffett has a private jet.
Well, no, he only has a part share, doesn't he? Doesn't the I think I read an article about the Telstra CEO. This is what it's all about. He has a fast car. He drives around in a big fast car. And anyway, but what about your chap from the
Next DC.
Next DZ? Yeah,
Yeah.
just talking about fast cars. I
Yeah.
mean, but he, look. So I actually owned that for a little while. So I got over my sort of. But he's not the hired gun, is he? He's been with that business.
He's been with that business
since the beginning.
pre-listing. Yes.
So maybe he's allowed a fast car.
You know what? I know it upsets a lot of portfolio managers, investors to see bosses, especially of smaller businesses, buying, stuff like that. But it doesn't upset me at all. I don't know. I didn't really get why everyone was so obsessed about Craig Scroggie and his. I think he had a Lamborghini and a Ferrari, and I don't know. It doesn't. I don't know. It doesn't bother me too much. I still think that's a wonderful business, and I think he's a great manager.
I think it bothers one more if it's all come out of share options, and they've got someone who comes in, is hired from outside the company as chief executive, and then makes a bucket load out of options, and then spends it on whatever. I think if someone's been built a business from scratch, I think it's a bit easier to stomach, isn't it?
Yeah, I don't know. Everyone has different ways to spend their money. Most of these.
Well, no, but what I mean is that it's just what you don't want is someone coming into a business from outside who is motivated by just taking money out of it.
Yeah,
the
that's true.
founder who's been there for a long time, you feel is still motivated to build the business.
Yeah, right. I understand what you're saying. Yeah. Now, this is a very long discussion about Altium. I think we better move it along.
Yeah, Altium. Let's wrap up Altium.
To get through.
Yeah.
All right, so it's all on track.
I have
JC,
no idea what car Magazine drives, but I reckon it's probably quite nice.
Probably is, yeah.
Probably quite. He does all right, I think.
Must have a couple of flywheels on that thing.
Yeah.
Actually, you know what, Mickey? I'm going to go next because I want to talk about Aussie Broadband, which is a stock that you know really well, Mickey, don't you? So for those who people probably don't realize this, but I remember this distinctly. Actually, it's a very clear memory in my mind. Mickey and I were walking in the city, and he just says to me, there's a listing I heard about this Aussie Broadband business. It's IPOing. I think you should probably go and take a look at it. It might be interesting. And I just heard the name Aussie Broadband, and Mickey told me that it resells broadband. I just thought that's going to be rubbish. I'm not going to waste my time on that. And then quite separately, 2 or 3 different people who I know inside the telco industry contacted me to say, there's an interesting business listing. You might be interested in an Aussie Broadband. And so quite a handful of people told me about it. Mickey was the first, and I think the only actual investment analyst to tell me about it.
So what you're saying is I deserve all of the credit, all of the
I'm not going to say you
plaudits.
deserve credit, but you certainly deserve some blame because Mickey how many shares did you buy of Aussie when it listed? And
Yeah, well, so I didn't buy any. So yeah, so I had no. Well, I mean, the thing was, I can't actually remember what the thing was. It was just an oversight, really.
I find it hilarious. It was kind of I would never have gotten to it if you hadn't mentioned it to me, and I remember in the Dragons Den, you were quite enthusiastic about it as well. And I don't know, you never bought it. It's
Yeah, well,
crazy.
I was sort of similar to you. Like, I just had a few people mention it to me. I think my brother-in-law
Hmm.
was the first person to mention it, and he's like, he just said that he said that he loved them, and I thought that was a really weird thing to hear about an internet company.
Yeah.
You don't normally hear that. So, but then, yeah, I didn't. You're the one who, yeah, put all the pieces together. So, um,
But more importantly, Mickey, I'm just trying to rib you for not buying shares in your own idea. Just crazy,
Well, it had
especially when
doubled by the time we all got to
yeah,
buy
yeah, it
it.
had doubled.
It
Yeah.
had doubled after the
Mhm.
float,
Mm.
and that was the time. I mean, you'd looked at the float, but we all knew it was going to do
Yeah.
very well,
Yeah.
and so we were waiting to see what price it got to before recommending it, and it doubled. And you still bought some yourself, and you still recommended it, and
Yeah.
I think that was a courageous decision
Yeah, I
on
remember
your,
that.
well,
That
not
was
courageous, but it's it's a good decision to be able to, if you like the business and you still think it's valuable. I get put off buying things that have doubled. I'm afraid, and that's a weakness. It shouldn't make any difference if you
mm,
think it's a good value at that price. Then go
but
ahead.
it was also a unique, I think, investment case in the sense that there wasn't anything sort of moaty about it.
that's
Yeah,
exactly right.
yeah,
Yeah.
Yeah, so
yeah,
it was kind of an
yeah.
interesting
And it's a question of
approach.
how
Yeah.
far you can go as the premium. And so I think that as a premium provider, how big a market is there for that? And I think that that's still unsettled, isn't it? So the market may be extrapolating a bit. The book is not closed on this, I think.
It's getting pretty close to being closed because they released results and it was a fantastic result. And it wasn't a surprise. I am surprised by the very strong market reaction post the result because they had
So what happened in the
basically,
result?
so that they just had a lot more customers, a higher ARPU, which drove more revenue and pretty good EBITDA numbers, actually, way more than forecast in the float, obviously. They upgraded float numbers twice and it was on bang with that second upgrade. So they're basically making $20 million in EBITDA. They've got 400,000 customers now. That's 50% more than they had a year ago, and sort of more than twice what they had when they floated the business. And it's actually the growth is in fact accelerating. If you look at the little trick here, if you follow the telco industry, the ACCC releases regular numbers on market share gains and losses from NBN connections, and just tracking those numbers, you can see that Aussie's actually taking an increasing share of the market, and their official numbers are sort of, I think they're at for just over 4% of the total NBN pie, but incrementally they're taking over 20% of new connections, and of those they're taking about 8 out of 10 of the high end $100 plus connections. So the market share is actually accelerating, and the breakdown of the customers they're getting is extremely attractive. They're hand picking the most profitable customers in the pool, and that's what makes this a better business than any competitor. It's
Okay, that's all fine. But what car does the chief executive drive?
and
And what kind of haircuts he
I
got?
was going to say, I was going to get to his haircut. I know the most important thing is the haircut. This is now I've told you sort of the secondary reasons we're buying it. The main reason we're buying it is he's bald.
Yeah, well, that just closes that conversation. But does he have a lot of shares? And was he the founder? And does he? And what I want to know is he like? Because of what I was saying before
Mm,
about tech companies, fast growing with ambition, does he
mm.
have that sort of drive, paper over the cracks sort of approach of Merkazemi, or is he cold and analytical, sees lots of downsides? What's his vibe?
Yeah, what's his vibe? That is probably for me in the last 18 months or 2 years. What's the vibe has been probably the most important question I try and answer now. It sounds really silly and facetious, but everyone can see sort of the numbers of the business, and that's clear to everyone. What's the vibe? If you can answer that question and get to a reasonable answer, I think you actually have an insight that other people don't have.
Well, I think for
Um,
these fast growing, I mean, look, I
yes,
think the vibe of the CEO of Telstra or CBA is
right.
not so much. That's a whole beast of an organization, isn't it? But these smaller growing tech stocks, it's a bit
Mm.
different. Sorry, carry on.
Yeah, so Philip Britt is the CEO's name. He's a co-founder. He founded the business with two other people. They're both on the board, and all three of them are major shareholders. What really got me interested at Float was that none of the existing shareholders, none of them were selling any stock, and they were raising capital for a specific capital project, which was to build out their own fiber backhaul network. So you've got an indication that the founders, you know, this is not a cashing out opportunity for them, and they had a specific project in mind. And even now, you can see that these guys have a vision, a real clear idea about where the business is going, how it's going to get there, and what they want it to be. I think that's really
And
valuable as well.
but do they gild the lily, as it were,
Uh,
in their results? Do they sort
Not at
of
all.
show the upsides and sort
No,
of?
this is, you know, then another strange thing is that uh, I often think every time I've heard a CEO swear, like use a profanity on an analyst call, it's always been a excellent
I don't think I've
outcome.
ever heard that.
I've heard it 3 times. I've heard it three
Which
times.
companies?
I've
Where
heard
are you hearing that?
Phil Britt. I've heard Aussie Broadband say, we do no bullshit here. We do no bullshit with our investors. No bullshit with our staff.
Oh, I might have heard
That's the
bullshit.
policy.
Is bullshit a profanity
I
these
don't think
days?
you can say it on a corporate call.
Yeah, well, maybe not. Maybe not. Keep going. Yeah.
And PWR, one of the things I love, I was listening to the CEO speak, and he said someone asked him about how long he'd been in the industry or something like that, and he said he just gave him the interviewer this blank stare and said, "Mate, I eat, breathe, and shit radiators." And when I heard that,
Yeah, I don't think you can say that.
I thought that was great. And the third one is Dicker Data, actually. The
So which
CEO
company
is
was that? The
that's
S word?
PWR,
PWR,
yeah,
right? Okay.
PWR, which is one of my favorite
I think
businesses.
yeah, well, I think a business like that where you're
Yeah,
making, brakes for fast cars, I think you can use the S word there. Yeah.
and then
Keep
Dicker Data is the other one, and that guy routinely routinely drops bombs all over the place.
going.
It sort of suggests they're not beholden to like
I like it.
some
Yeah,
external
you're right.
corporate, facade. Like, they can just be themselves because they're confident in their role, and they're not
Well, it
going to hurt
helps if
someone.
you've got 20-30% of the company, doesn't it? How much
It
has
does.
Dicker Data guy got of the company?
The Dicker Data guy, he has heaps. He'd have
Yeah, so
sort of
I don't
40% or so, wouldn't he?
he's
He had
not worried
huge
about his job.
percentage. Yeah.
Yeah.
But the other thing is that I think the way the CEO, the other thing I've noticed is just watching anytime a CEO is is in uniform, is in a company logo uniform. I think that also says something.
Yeah, that's great. That's great. That's Aidan Williams of Audinate. He's always wearing the
Yes,
Audinate
that's right.
t-shirt. Love it.
Every time anyone from Aussie Broadband is on anywhere, they're always in uniform. And these may seem like small things, but these are all decisions that the company has made. You could the CEO could get up one morning, he makes a decision to wear a suit, makes a decision to comb his hair, makes a decision about his language, and all those decisions come from some point of motivation. And I think if you listening carefully, it's not the most important thing, right? It's not that's not in your investment case. It shouldn't be the most important thing. But these are all little bits of information, and you can put all these little bits of information, and they give you a sense of the vibe. You can't open the book and read about the vibe. You have to you have to get clues
Price to
elsewhere.
vibe ratio.
Yeah, yeah, and it's difficult because
Yeah,
you can be put off by false sort of signals as well. Yeah.
It's
yeah,
a kind of a fluffy thing,
Yeah.
but you're right. Like, it's definitely information.
it's information. Yeah.
Yeah, the most
So
important thing at the bottom of it all is that they've got a bunch of shares and that they've been there from the start. You know what I mean? That's the
yeah. One thing always says, of course, Greg Hoffman, our esteemed friend and mentor, always says that look for guys who go from 0 to 1, and I think there's a lot in that. And all those businesses have gone from 0 to 1. They've actually made something, created something, and I think that breeds something quite special. I Aussie's now morphing into something beyond what it has been over the last few years. So one of the most surprising things in its results, and it was not getting away from the numbers here a little bit, but the most surprising thing was the this the breadth of its ambition. So they talked about. I kind of expected them. Everyone knew they're going to move into enterprise. They built this really sophisticated enterprise portal, so they're getting enterprise sales at really high ARPU. and pretty strong customer growth from there, and that's great. But then they also talked about we're going to set up security services, cloud services, managed data services, and these are technically demanding, competitive, and tricky things to set up and get going. It may scare many investors away, knowing that the business is moving, I wouldn't say away, but just adjacent to what's been a very successful core operation. But it reminded me a lot of Macquarie Telecom, which began in very much the same way. And Macquarie has been one of the most successful recommendations I've been involved with in a short time. It's sort of four bagged in the space of a year. And in my personal portfolio, it's one of my most profitable positions in my personal portfolio. It's just been a wonderful little investment. They began as a traditional telco doing very similar things to what Aussie was doing. They're providing basic services to a specific niche, but doing it better than anyone else. And then they use the customers and they use the resources that that niche gives you. And then they go into more sort of specialized, higher margin, more attractive areas. And I think that's the same sort of model that Aussie is building. So it's quite possible to see Aussie morphing into a much more interesting, larger, and diversified business in the years ahead. And that's why I think it's worthwhile, even though the price looks silly. I think the market is now starting to recognize that this is a profitable, much better quality business than any of its competitors. I think it's still possible to get really good returns from holding on from here.
What's our buy price for it?
So buy price is $2.50. It's now over $4.
Yeah.
I'm going to be thinking about that buy price, and the problem is it's very hard to value, right? You've got all this optionality of things that they haven't done yet, but you've got this tremendous track record of things they have done. So how do you put those things together in a sensible valuation? And it's hard. I don't know. So we're just going to have a bit of think about that. But
Margin of safety. That's
margin of safety. Yeah.
That's the thing, isn't it? But look, it is hard, and this is the problem with stocks that get away from me. All the stocks that have got away from me, they've started off by doubling, and and then they've doubled and doubled and doubled again. And so, but I don't know whether this is the one. I mean, everything that you were just saying makes it a bit more interesting because you feel limited or I'm limited in my thinking about it by what they're doing now, and maybe that's the mistake. But anyway, yeah.
Well, there's
It's
a balance
difficult.
to be struck there, isn't there, JC? Because you can always say, "Oh, they're going to do this and they're going to do that," but at some point, you can't just you have to put some numbers down somewhere, right? You can't just pay anything for what they're going to do or ambition. There has to be some sort of stakes in the ground somewhere. I just think
Well, some businesses as well, and some management teams, just are more likely to find new ways to make money over
Yes.
time. Like, I guess if you've got, it's pretty easy for a software business to come up with a new product relative to, well, I can't think of, a shoe manufacturer.
Well, you don't have
or
to build.
something.
You don't have to build a factory. I mean, that's
Yeah.
the thing, isn't it? It's a bit easier to roll out, software.
Yeah,
Although
yeah.
I mean, look, you've still got to hire a lot of software engineers. Anyway, yeah.
Well, yeah. I mean, I guess it's just about trying to assess, what characteristics make it good for, finding new ways of making money, and it's really hard to value, but it's definitely extremely valuable because, like, if you look at things like Google or Amazon back in 2005 or 2010, they just constantly reinvented themselves, and so much value. If you put that into a DCF at the time, you would never have been able to put that into a model. But
I think it's about having that dominant platform of some description, or that user base somehow acquiring, a presence that enables you to reach people with different new products. And so maybe Aussie Broadband is doing that by, getting.
And I also think what Mickey said earlier is really important. There are some management teams who are just good at finding ways to make money. I've called it hustle, and it's become a real core focus of my investing is trying to find these teams that marry. Geez, what was that? Was that the voice of? Is that because we struck a great idea? We had this
the gong.
this light bulb moment gong. It's suitable if that's what it is, because here's the
I
core
didn't
idea.
hear any gong.
Oh,
Oh,
right.
I heard a big gong. Maybe it
No,
was
I think
an
that must be
internal
your
gong.
It's
place.
in your head,
Yeah,
Gaurav.
must be. You know what? Maybe they've still got tradies around. Maybe there's
That's
still
what
something.
happens in your head when you have a light bulb moment.
Yes.
Jeez, I wish I had.
I
Man.
heard a
It'd be handy.
big gong, like a huge. Anyway, there was a big gong. Yeah. So you want to find a marriage between decent economics and management with hustle, and it's easy to identify decent economics, hard to identify the hustle, and I think we've got it here at Aussie Broadband.
So you're going to say an intelligent investor, but
Yeah, let's move along from that. Mickelson, you've got a stock for us as well. What can you follow up with two exciting, dramatic entries from JC and I? Got to be good.
oh well, I feel like you're leading me towards Commonwealth.
Yes, what a disappointment. Okay, all right. Let's give you a chance.
Well,
Go
look,
on.
I mean, well, I never said it was going to be exciting. We've got timestamps on these, I think, so you can just
Skip ahead.
skip ahead.
No.
If you.
I reckon we should hear you out. You bought CBA along for a reason. We may be laughing on the inside, but we are here with you. Mickey, go
Well,
ahead.
I'm not saying it's a buy idea or anything like that. But it is an interesting thing, I think, at the moment because well, I guess the result in itself wasn't really much of a surprise because what you saw was that banks are extremely profitable, and that's largely because house prices have recovered, consumers are doing very well, which is good if you're making home loans and loans in general, really. So there's been a lot of government support, and you kind of seen that flow through to the banks. And so so the result was really not too much of a surprise. I think what's kind of interesting now is just the way that Commonwealth in particular is really changing and really responding to some of the larger threats that are kind of emerging, and I think that it's always going to be a lender and it's always going to be a bank, but it is definitely now it's spending. They've called out for sure that spending over $1 billion, I believe, which is a huge amount on new kind of technology, and so so it's kind of changing. It's kind of responding to a lot of these threats, and I thought that was sort of something that was a little bit interesting, basically. So
The threats are
um,
definitely rising, aren't they? I mean, we've got this the Square and Afterpay tie-up, and we've talked internally a lot about this. We've published a little bit about it, but that is a significant competitor to, I would have thought, bank terminals and bank payment. Then you've got these neobanks. Then you've got these small technology-led lenders. I would have thought that there's no real big brand name bank coming after the big four banks and CBA in particular, but there's a lot of little smaller newish competitors that they have to contend with.
And
yeah.
this is the thing that makes me wonder is because you say they're spending $1 billion on technology.
Sorry, I need to get the actual
Oh
number
no, but
in front of me, but
it doesn't really matter. But
it's a lot.
what I was thinking is that even if they build, how much was Afterpay taken over for? Was it 40 billion or something?
Hmm.
Even if they build an Afterpay, even if they
Mm,
manage to strike gold and create an Afterpay, that's um, around about a third or a quarter of their market cap. So I mean, look, which would be nice, but it's kind of incremental. Do you know what I mean? It's not like they've got that sort of. It's so it seems to me that all this this spending is quite defensive in nature.
yeah.
It's gonna protect what they've got, rather than the trouble is they've got so much to lose. I think
Well,
they're such
yeah.
a
I
big
mean, so
company.
Yeah.
this is kind of the interesting thing, I guess, about how they're responding. So I guess the advantages that they've got at the moment is, they're quite big, and they've obviously got existing customer relationships with, I think it's 1 in 3 Australians. They're the primary bank, and so they realize that you've got all these fintechs and you've got these shadow lenders and whatnot that are starting up, and they're kind of getting into payments and lending and budgeting, filling all these kind of like little niches. Um, but I don't think that they can compete with every little thing. But I think that what they're trying to do is basically just try and stay at the center of the ecosystem for those customers, and then if they can partner with those fintechs, or they can come out with some of their own functionality, and I guess maybe what they're trying to do is almost become like a banking platform. And that sounds like a little bit funny or a little bit strange to say about a bank, but if you can maintain that role as, the center of your customer's financial ecosystem, and then you can have apps that come in on top and integrate with, the banking experience, well, then you can build out all this new functionality, all these new apps, all these new services into the um, into the platform. And so I think that is kind of interesting. I
That
mean,
is
obviously,
But
interesting.
yeah.
my concern is that if they're getting into that, becoming a sort of platform, we're talking about a digital platform. We're talking about something that's online, and in that space, there's a whole bunch of other companies that could do the same job. I mean, you got people like Apple, for example, or Facebook, or whoever. I just don't even know who can provide white labeled financial products.
Yeah.
And it takes them, because what banks previously had was a big branch network, which was necessary. You had to go to your local branch to go and do something, to go and deposit a check or whatever it was. And without that, I don't know why you necessarily, I mean, of course they do have a bunch of users right now, but credit cards are being eaten away at, and this whole idea of a platform, I just wonder where that goes over the next 20, 30 years. I don't see why they should have a particularly, if Apple would do my banking, I think I'm there in a second.
Well, yeah, and that's I think the threat that they're responding to, because as you say, like, they're essentially just an intermediary between capital markets, central banks, and borrowers, basically. And so the thing, I guess, with Apple and Google is they've got the scale, they've got existing relationships, they've got devices in everybody's pockets with payment chips. So it's a very small step, really, between that and potentially offering people loans. But I guess if you can leverage your existing customer relationships, and that you've got a good starting place potentially to respond to that threat. And so it might not be that Apple and Google take over banking all over the world, but there probably will be a competitor among many kind of competitors. And so it's interesting. I guess you can almost say that there's um, so that's, I guess, what they're trying to do. Whether they'll be successful is kind of the interesting thing, and it's going to be quite interesting, I think, to watch it unfold over, as you say, over the next 10, 20 years. But
Just, I think, and John wrote that article a few weeks ago about what, I can't remember what it was called, but talking about how easy it is now to switch, and so switch your mortgage. And this is the thing; it just, if big tech companies are white labeling loans and so forth, where's the value in just having an actual bank? That relationship just becomes devalued, I think.
yeah, well, I mean, you've got I think I mean, it's hard to argue, obviously, because I'm not kind of taking the other side. Like, I do think that Apple and
Mm.
Google can potentially be a threat. But it would seem that there's also quite a good starting point for Commonwealth, to respond to that. And yeah, I mean, at the end of the day, if from a customer's perspective, what do you really want? You want low cost, you want good service, you want to get your loan quickly, and you just want someone that, a company that you can trust, probably, and maybe a few
Well, you want
apps
that
on the side.
deposit guarantee, don't you, as well, for for your deposits? I suppose that's a
Oh,
big thing that the
exactly.
banks have.
Yeah.
I don't know whether people like Apple automatically get that if they ask for it, but
Well, that's
um,
it. I mean, because they are like, so. I mean, so why wouldn't you keep on banking with Commonwealth if they can tick all those boxes? And why wouldn't you get your loan from them? If they
well, you
continue
might,
to
but
tick
you
all those
might.
boxes.
It just might hurt margins. That's the thing, isn't it? If you've got all these other people and it's easy to switch, and that's so. I think, yeah, that's
Yeah.
the
If we step
threat,
back
isn't it?
for a moment, CBA and Mickey, I don't know the bank. I think both of you would know more than me, so please correct me if I'm wrong here. But CBA owns most of its money from its mortgage book, right?
Yeah.
the product is not really under threat. Is what they're doing just sort of is that really, does it matter at all when so much of their value comes from their
Well,
mortgage
the
book?
margins have been coming down on the mortgage book, haven't they? The net interest margin.
Yeah, that's true. Yep, they have been coming down, but I'd say that's probably a function of where interest rates are. And every time house prices rise, that's just automatic growth for that mortgage book because people have to borrow more money. So the volume just keeps on compensating for that margin decline.
Mm.
In periods of low interest rates, the opposite probably happens
Yeah,
in periods
which
of high
some would
interest
see
rates.
as a risk,
Yeah.
Yeah.
because I mean, if interest rates are maybe as low as they can go and all that.
Yeah,
Well, I
but
think
then their
though
net
that's
interest
probably
margins would
what.
increase as
Yeah,
interest
okay.
rates
So
go up.
so if the book, so
Yeah,
that would
yeah.
reduce maybe
So
the
I'm just
That's
revenue.
wondering
probably
how
what the
much all this,
yeah.
how much does it matter, Mickey, for the actual value of the business? Is this kind of just creating optionality for CBA, or
Oh
is
well,
this something more fundamental than that?
yeah. Well, I think it's just preserving their market share really. And so yeah, I mean, they're just it's just you know, the banks that aren't doing this, and I
Yeah.
guess,
Okay.
Commonwealth is a good example of a bank that
Yeah. Yeah.
is
Yeah.
responding, is well placed to respond, and probably does have a future. But then it almost increases the gap between the
Yeah.
Commonwealths
Okay.
and everything else that, they don't have the resources to actually respond. So I guess it
They'd be
just
the
play.
only ones doing it, right? No other bank is anywhere close to where they are in
Well, I
terms of
think
tech.
they're further ahead. All the banks are putting more software into the cloud, and focusing on simplifying processes and quicker loans and stuff
Mm.
like that. But I think Commonwealth's definitely got a lead, and they're coming out with their own buy now pay later product, which they'll roll out to all their customers. They've
Mm.
got this new thing called Unloan, I think, which is going to compete with potentially Athena and some of these more nimble lenders. So. But yeah, I mean, at the end of the day, they're obviously going to be driven by loan volumes and net interest margins, and that won't change. But I guess there will be a lot of change, I think, in this industry, over the next 10, 20 years.
Mm.
Um, and so that sort of just, they're making the investments today. I think that, they can see the threats on the way.
Mm.
So I think that's why it's interesting. And, it's also interesting now because, the market is starting to price that in. And I think it's on a PE of 20, which is one of the highest PEs it's ever traded on.
Yeah.
Um, and I think on a price to earnings ratio, price to book ratio, it's pretty much the most expensive bank.
What's
But
the price of the book? Is it getting up towards 3 again?
yeah, it's about 2.5.
Oh.
Yeah.
So
Oh, that's more,
yeah.
my first reaction was, oh, it's not that bad. And I thought, hang on a second, 2.5 is
Two,
Well,
two
yeah.
and a half is plenty. Yeah.
I mean, it's pretty high. I mean, so
Mm.
I guess the returns from here, that you can't imagine that they're going to be great.
Mm.
They've just got threats from all sides, and they've got a decent return on equity, but you know, um, they are having to just defend themselves. They've got kind of just lower interest rates always eating into margins. So.
Mm.
Um, yeah, so I wouldn't expect a great return from here. Definitely at the current levels, but I just thought it was I just thought it was interesting how they're responding basically. So I found that an interesting result.
Yeah, interesting. No, I'll give you that, Mickey, because yeah, there is some interesting stuff going on there. Geez, that price looks pretty remarkable, though.
Yeah, well, I mean, if you
I didn't realize it was up so high. That is
a lot of
really.
people will be sitting on a lot of capital gains, really. So
Mm.
you got that buyback now as well. If it's probably not a terrible time to look at taking some profits, really. But if you that buyback could be a way to do that. Which is they're doing a $6 billion buyback. But
Goodness me.
so they continue to take market share as well. Which is good to see. So they've got great capital backing as well. So much of it does tie into the housing market though as well, doesn't it?
Mm.
Just like a proxy for that,
Yeah, but
the
Mickey,
housing
housing
market
never
growth.
falls. It always goes up.
Ah,
So we're in
jeez,
good
tell me
hands.
about it. As a renter, I can't escape that, unfortunately. So yeah, but
Right. Well, we've got a couple more stocks. Gents, we're
We can
almost 50
skip.
minutes in. Should
Yeah,
we
skip through them quickly, or yeah,
Yeah, all
I
right.
don't know.
Let's go
What do
through
you
them
think?
quickly. We probably don't have time to go through them in as much detail, so let's go through them fast. JC, yours is, I dare say, the most interesting of the bunch. Let's start with yours.
Oh well, I think so. Yeah. So
Mickey
we
sitting there with a
mentioned
scowl on his face.
we mentioned Aidan
Yeah,
Williams
what are you
before,
trying
the
to say
chief
about
exec.
Commonwealth?
Oh no, we're talking about
Optionality, tech company.
anyway.
Yeah.
Yeah, so I was going to just quickly mention Audinate, which
Mm.
had, I think, a great result. But particularly interesting is, whenever you hear them talk or present, is what they say about video, and they reference this demonstration showcase. It was called in the US recently, whereby three people or three groups in different locations um, were all able to Washington D.C., New York, and somewhere else, and they were all able to be patched together into what looked like the same video. I think,
Mm.
which is a remarkable thing, I think, and it just shows the value of combining their video and audio technology. Audio is where they're very strong already, and video is where they're just getting started, and is potentially at least as big a market. Um,
Now, James, some people might look at Audinate and see a near $1 billion valuation, a big loss, and small revenue, even smaller revenue gains, actually. What would you say to the skeptics about this business?
what I'd say, look at my article from a month ago, which looked at how things could pan out over the next 20 years. I mean, at the moment, they have a very dominant position in a market which is only just getting started.
Hmm.
And so, as in digital networking of audio and video, and the software that goes around that. And so their revenues they're making, and it's a market which it has adds clear value. There's clear reasons why you would want to do this digitally rather than with analog cables. And so it's very easy to see that market growing, and they pretty much own it in the audio segment. Not so much video. Videos at a much earlier stage of development,
Hmm.
and then there's the software around that. So the market, that market is growing. Their share of it should be growing, and so the revenues that they'll be making in 10 or 20 years' time, you can really see how they can be many times bigger than they are today. So I think that it's still making a loss, and it will do for another few years, but it's got a very bright future because the market has their major network effects, and it's already the dominant provider. There's no one really on its heels, and
Hmm.
so it's hard to see how it won't keep growing rapidly.
That's pretty good. That's a good answer. I would. My
There you go.
answer would have been just a smack across the back of the head and open your eyes. Can't you see? It's pretty clear. This is I mean, this is a business we love at II. I think we looked at this. JC, when was it? I remember you guys, a bunch of you went to the Shaw's presentation and came back just uh, just gaga about Audinate, and I don't think I've seen such excitement about a business in many years, and
Well, I think
that
what was
excitement
different,
hasn't diminished.
yeah, what was different about that presentation Alex and I went to was that we'd been researching the company quite a lot. We were already liking it.
Mm,
But we got to see Aidan Williams, who was then the chief technology officer and has
mm.
become the chief executive. And
You
he
liked his
just,
hairstyle?
yeah, well, he was wearing the company shirt,
Well,
and he
yeah,
was very down to
hairstyle.
earth.
There we go.
But he
Belt
was
at the
very
right spot.
confident. He was also very
Young fellow.
confident in the business. Um, and I think he said, what was it? He said it's not really about the technology anymore. Were the words I think I remember that grabbed Alex because
Mm,
when people say that, he was basically saying we just
we've
own
won.
the space now.
Yeah,
It's
yeah,
it's 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 done. It's about marketing
yeah.
and just growing that market rather than beating off competitors.
Mm,
And but he was just very um, yeah, very, very genuine and very down to earth. Understood the product. I mean, he designed it back in the day, and he's been there since the beginning. And yeah, a very good man to have leading the company now.
yeah, it's amazing, isn't it? It's not often we talk about sort of a tech business in those terms. Often when we're analyzing, or most people analyze tech stocks, they're really focused on the technology and the network. And here we are, talking about the CEO. And I just think shows how important people are in businesses, in every kind of business, not just customer facing soft businesses, even hardcore tech companies. The people in charge really matter.
Well, I think it's important in a company like this, which is developing so much technical product, because he can actually talk to all the people he hires in a technical way. And they recently hired a bunch of video engineers in Cambridge in the UK, and they did that in lockdown, without being able to. But I think they did it basically over Zoom. But he was able to communicate and give confidence to those people about what the company was doing, and he was able to understand their skills, and the ability to having someone so technical running the company, I think is a great thing. But he also, whenever I've spoken to him, we've done one or two videos with him. You might be able to find them on the website, and he's fully across. It's like once you've done audio networking software, understanding company financials is a bit of a breeze. I think he's fully across how to add value financially.
Nice.
So great man to have a lead in the company.
Excellent. Mickey, tell me you own this one, please. I'm going to cry for you if you don't.
Oh yeah, no, I do.
All right, thank goodness.
Yeah, no, it's been great. It's been good.
Very good.
Good for the old nest egg. That one.
All right. I've got BHP, which now seems very underwhelming, but look, I thought it was important just to quickly update what's happening here. Not because it was a very good result, actually, mind you, but just because there are so many changes announced from BHP. And I wandered into this result very confident about the outcome. I kind of thought I knew what they were going to release. And then they released a handful of bombshells, which was just one after the other, really, really surprised me. So the first was the spin-off of the petroleum division, which kind of had been spoken about in the media. I'd read articles that they were thinking about doing it. I thought it would be a South 32 style spin-off and hand to the shareholders. I did not anticipate the deal they announced, which was a spin-off and merge with Woodside Petroleum. Now, I've read a book, a biography of BHP years ago called The Big Fella, which is a brilliant biography of BHP. Starts from BHP's founding last century and just goes through every major development, all the problems they faced, all the great things they did, and you really get an understanding of the business. If anyone is interested in BHP or is a significant shareholder, you must read this book. It really gives you a good indication of the business, where it's come from, its ambitions, and its problems. In that book, they talk about 3 deals that BHP has always wanted to do from way back in the 80s or the 90s. They've highlighted these deals as dream deals for BHP. It's interesting to go through them, actually. So the first deal was they've always wanted a merger with Rio Tinto, and they want to do that because they could Rio Tinto and BHP own competing sets of infrastructure in the Pilbara, and they mine different piles, and they have to then move those piles of dirt onto their own infrastructure. If they could share infrastructure, they could just make the movement of ore so much more efficient. They could lower costs dramatically, improve blending, improve grades, and improve throughput through both their infrastructure pipelines. And that would be a remarkable deal. It would never happen because the Chinese would shoot it down instantly. But it's always been on their wish list.
Why would the Chinese shoot it down?
It would form a monopoly on iron ore production, basically. They would have about 50%.
Well, what does China have to do? How does China have any the authority over that?
Yeah, I don't know that question, but I know that when you're doing a big international merger like that, there are a handful of international countries have to approve it, and because China is such a large customer, they do have to go through an approval process over there. I mean, if China says no and we go ahead anyway, there's a risk that they might. I mean, they probably still have to buy the ore for a time, but I don't think that would happen without an approval from China. Just as Europe has a big European approval has a big say is important in American mergers as well, just because they do business over there, and the European authorities have to authorize like sort of big industry mergers. The same deal here. Actually, there's no there's no indication that the ACCC would allow that merger to go through in any case. But that's always the big dream deal. The second one has always been a takeover of Western Mining, WMC, which of course BHP completed in about 2007 or so. Now that deal is always on the wish list because it's basically a takeover of the Olympic Dam mine. Now Olympic Dam is hey, did I hear someone yawning back there?
JC,
It was not
JC,
me. It was
I'm
not
just
me.
about to
It's
talk
probably our
about.
producer, Steph.
I am
isn't it?
just about to talk about the most amazing mine in the world, and you're yawning. It's terrible. Olympic Dam is maybe it's either the top or the second most profitable ore body in the world. It's like the world's fourth biggest gold miner, its biggest uranium deposit. It's like second or third biggest nickel deposit. Like it's an amalgamation of all these minerals, each on their own of gigantic scale, and combined, it's just a monster of a mine. When BHP proposed a few years ago to do an open pit, the open pit at Olympic Dam would have been physically the size of the entire city of Adelaide. Um, it's a big mine. But they've never really cracked the economics of the mine, and it still loses money, even though the ore is notionally so valuable. But anyway, that was the second dream deal, and the third dream deal was a takeover of Woodside. And so there's always been these strategic plans to buy those three assets at some point. And it's interesting now that two of them have been done, and the Rio deal, I just wonder whether that will get done one day somehow with a demerger or merger of assets. There's still a way. There's lots of ways they could go down, and maybe one day it will. But they're doing that. They're going into potash for the first time, which is a brand new commodity for them. First time in maybe 20 years, they're going into a brand new commodity. And they're probably back on the acquisition trail. So I think by this time next year, you're probably going to be seeing BHP buying mines again. And I wonder how the market is going to react to that. I think it's going to be a bit scary for many because people have a long history. Remember, BHP is an awful acquirer of assets, but I do think the company has changed and doesn't scare me as much as it used to. So BHP changing once again, and it's going to be in a few years' time. It's going to look like a very different business than it does now. So prepare for that. I still think it's a wonderful business. Actually, this is not just a cyclical iron ore business. It's a high quality miner, and I think across the cycle it can generate really strong returns on capital. So it remains a hold, even though the iron ore price is falling off a cliff. It remains a hold, and we'll update when there are updates warranted. I think I got through that pretty quickly, gents. Any questions?
Not from me.
That's because you're too busy yawning.
Well, I mean, it was the Commonwealth Bank that set the tone, but
yeah, I'm glad it wasn't you, Mickey, because coming from the CBA, you got no chance of yawning BHP.
What's your number two, Mickey?
What's that?
What do you got?
What's your number two?
My number two. So I'll go with Australian Ethical, which I thought just
that's a good one.
Had a fantastic result. I mean, when I first read it, actually, I was a little bit frustrated. Actually, I was about to rattle off an email because they grew profits by about 19%. And it's like, so obviously they're the responsible fund manager, and there's money pouring into ESG, and I just thought that they should be attacking the
Ethical, social, and governance. I feel we should say is what that stands for. Yeah, ethical funds.
Thanks.
Yeah, keep going.
Yeah, so ethical funds, and so there's money heading into this area. But I've been like reading, for example, Perpetual's report. And I was really frustrated because they've just bought this responsible fund manager, Trillium, and it's pretty obvious what they're going to do is they're just going to try and ramp up marketing now and try and attract as much flows as they can. And so there's just going to be a lot of competition entering this space. And so when I read the annual report at first, I was a little bit worried because I just thought that they weren't investing enough making sure that they
Mm.
were going to stay at the head of the pack. So this result, basically, they just explained that they're going to be investing pretty heavily in maintaining their market share, growing it, growing FUM, just maintaining that market leadership, and they've got that kind of long track record. They're outperforming across all their funds now. They've got very sticky customers, and they've got this kind of really nice Google SEO advantage as well. So they kind of tick all the boxes. They just need to get the message out there. They need to build the infrastructure, the relationships with the advisors. One of the other things that sort of has been a little bit of a frustration for me is seeing like beta shares, for example. They've got this Ethy and Fair ETFs that have just been growing like crazy, and I've always wondered why Australian Ethical didn't launch its own ETF. Because they're getting just incredible flows through that beta shares. But yeah, so they announced in this result that they should have a product like that in market hopefully within the next 12 months, and they've got a high conviction fund coming as well. So yeah, it just seems like the business addressed pretty much all my concerns, and they seem to really have the opportunity set under wraps now, and it looks like their management reckons that they can grow FUM. They've grown from 1 billion in FUM to 6 billion in about 5 or 6 years,
Wow.
and they reckon they can grow that another 3 to 5 times over the next 5 years.
And Mickey, do you have a breakdown of that growth from inflows and performance? Do you know that off the top of your head?
Off the top of my head, so they grew. I think they're doing about $90 million a month at the moment
Of
in
inflows?
flows.
Really?
Yeah,
Hmm.
yeah. So it's like, and that number's growing. That number grew by 56% year
And
on
where's
year.
that? Is that coming from the advisor channel, the retail channel, the wholesale
The
channel?
advisor, well, so it's all of them.
All of
It's
them.
all the
Wow.
channels. But the advisor channel is one that they've really only just started to explore. Like up until last year, even half of advisors hadn't even heard of them. So there's just low hanging fruit there about
Mm.
getting the message out to some advisors, because there's more and more people asking their advisors about this now as
Yep.
well. So the
Right.
advisors kind of hold the keys to the kingdom.
Mm.
And so yeah, the flows I think from the advisor channel have just started really uh, ramping up. So yeah, so that's been exciting. And I think what's actually quite exciting about it is even if you look 5 years out, you can see that there's potentially quite a long runway even beyond there. So um, and the ESG or ethical, I think, style of investing, I don't think it's going anywhere now. I think there's definitely boards across the country are taking good notice of ESG trends, and yeah, I think they're just really well positioned, and so yeah, it was just a great result.
Yeah. Nice one. JC, any questions on that one?
Well, I would say my concern with Australian Ethical, and it's not that much of a concern because I own it, but so they give away some of their margin, don't they? Or they've promised that they will, sort of as they reach certain targets. Can you explain that? And so that to me limits the upside a little bit, but obviously that also helps with their marketing and helps them gain funds. So
Yeah. Well, so as they're scaling up, they are lowering their fees, and I actually think I actually see that as a positive, because I think yeah, so um, so your margins are going to come down. However, it's also making it harder for other people to compete with you, and as you grow, you're going to be able to charge a lower fee than people who are smaller than you, just because you're spreading the fixed costs across a
yeah, yeah.
larger base. So, it's just gonna. They've just got this
But I
first
suppose for
mover.
existing big fund managers who want to start an ethical fund and can do so and lose money on it for a few years, that it would be easier for them.
Yeah, it would be. It's hard though. I think because it's just difficult to compete with Australian ethical. I think given the track record and given the kind of they've done this for 30 years. So, if a big company comes along now and says, "Hey, we're ethical," and we've got you get these big super funds that are just like,
Mm.
"Oh, hey, we've got this ethical option." I think it carries a different weight,
Mm.
and like for example, Australian ethicals donating 10% of profits to charity. Like, are they going to start doing that? Maybe, but so and there's no doubt there'll be competition, but I think these guys are just really placed quite well. So I'm not so worried about the margins. I think they'll make it up on the volume eventually, and it's just making it a more competitive business longer term.
What does worry you is that the valuation looks crazy on just plain metrics, but
fast-growing fund managers,
Yeah.
the valuation always looks
Yeah,
crazy. That
exactly.
could have kept you out of Magellan for a long time. For
Well,
example.
the problem is it's got profits, I reckon. If it didn't have profits, it would
no one would
no one would be batting an
That is a
eyelid.
good point. That is a good point.
Because there's so many software stocks out there that are just priced on massive multiples, and no one really criticizes them. I mean, it's just strange, I guess, for a fund manager because we're not used to seeing them trade on these kinds of multiples before. But I mean, if the opportunity is as big as this, and maybe people now are starting to recognize that opportunity, then I don't know. I just I think.
And the cost base is relatively fixed, isn't it? So as the funds flows in, the earnings can increase quite rapidly.
Yeah, well, I mean that's a big strength of like Magellan.
Except for when you're cutting your fees, though. That's I suppose the problem, isn't it? You ramp up the marketing and cut your fees, and so
they
it
said
doesn't
they're
grow
gonna.
quite as quickly. But
yeah, they said they'll cut the fees as they scale. So I guess there's gonna reach a point if they don't keep growing, then where they maybe won't have to lower fees as often. But
Mickey,
so,
can you talk
yeah.
about the capital allocation a little bit? Because I guess they're making massive free cash flow. How is that? How are they spending that free cash flow?
Well, they're paying a lot out as dividends, paying because they don't really need to keep much cash.
Yep.
But there is potential, I think, for acquisitions at some stage. And there's a couple of different ways they could go with it. They could take out like a local competitor, and then potentially, they can combine marketing, or they can combine, the access to distribution channels or something like that. To get some advantages that way, or they could potentially look internationally. And I don't think management's really said too much about that, or anything. But I think that that they mentioned it as something that they're considering, or something that's just part of what they consider. But I mean, they haven't really pushed into international investing, for example. So that could be. That could be another opportunity as well at some stage. So coming back, I guess, to what we were talking about earlier about the different opportunities and looking for companies that have different ways to grow, like Australian Ethical seems to just have that going for it.
Yeah, look, I'm a shareholder, and I'm obviously very happy with the business. But the one thing that worries me a little bit is just with these capital light businesses, you can see sometimes the capture by staff to be higher than the capture by investors or shareholders, and that's something I'm just watching a bit more. Maybe they pay some of the surplus; they can make surplus out as bonuses, and that pay as a proportion of revenue. I just want to make sure that kind of stays in line. It has to be fair, I guess, so everyone gets paid well, but there must be tempting sometimes to see that creeping up.
Yeah. Well, I think that's right. Like you've got to keep a control on expenses, and so yes, and make sure that the margins preserve the margins for shareholders. But I think they're just trying to balance all the different competing priorities, and so hopefully we can keep an eye on that and watch how that unfolds. So we've got a hold on it at the moment, and yeah.
Nice one. Again, that was a really good upgrade because you upgraded it at a time when it looked optically silly, and it fell right after you did it. So to keep your nerve and to keep the bar on it was great. Nice work. Right, gents. I think we better finish this off. We've been talking for a while now. People are probably sick of us. No one's probably listening to this part of the podcast. So if you want to say anything, now's the time to do it.
If you've got this far, well done.
Yeah.
It's been a marathon.
JC, great to have you back on. Thanks for your time today.
Yeah, pleasure.
Mickey, as always, thanks for coming on. Didn't hear from the dog today.
No, he's having to lie down. It's actually what's he doing in the corner there?
I'm
He's,
about to do the same thing. Go in the corner, curl up, lie down. Sounds good. Thanks for your time, Mickey. And
Cheers.
for everyone else, thank you for listening.